In other business news, South Africa's private sector faced a significant downturn in January, with the S&P Global PMI dropping to 47.4 points from December's 49.9, marking the lowest level since July 2021. Furthermore, this decline was primarily driven by a sharp decrease in client demand. Additionally, the index has now remained below the 50-point note threshold for 2 consecutive months, indicating worsening conditions. However, business sentiment showed some improvement, with 41% of companies anticipating growth in 2025, up from a low of 20% in December. Analyst Mishima Gama provides further insights on the PMI data.
The S&P Global South African Purchasing Managers Index figures came out today, also known as the PMI figures. They fell to 47.7 in January from 49.9 in December. This is the lowest since 2021. Now, what are these figures? They are a compilation of data from purchasing managers in the manufacturing sector, and they're used to gain insight on industry conditions, also providing understanding on potential growth or lack of growth in the sector. So basically telling us the general direction of economic trends in the manufacturing, construction, and services sector. Now, a figure that is above 50 means that the manufacturing sector is expanding, and one that is below 50 then means that there is a decline. Now, to put this into perspective, a healthy economy is driven by healthy manufacturing. So these PMI figures are a key economic tool and possibly the most reliable leading indicator on a country's economy, because they help companies as well as investors get a grasp of what to expect in the future with the economy. Our figure came out below 50, and this is because there was a drop in new orders, which then affected which caused a cutback in output. This simply means that companies struggled in winning back consumers at the beginning of the year, which will then affect growth in first quarter. Now, how do these figures affect the market? Well, an improved PMI figure prompts purchasing managers to expand because there is demand, but that is inflationary. So in retrospect, a consistently strong PMI figure also hints that there is inflation in the horizon. So ideally, an economy would want to keep that figure at a neutral level, which is at 50. Ours came out below 50, which then suggests that our economy is starting to contract.